almost without a doubt, the most hated all-time high in the stock market I've ever seen in my life, which means it probably has more legs, I can't remember any rally that's been hated like this at the highs. I've seen rallies off of lows, off a big move down be hated. That's pretty typical. The move off the low in 09 was hated for quite a while. The move off the low in 2022 was hated and probably still is, but has been kind of hated this whole way. So it's typical off of lows, but at all-time highs for a market to be this hated I don't think I've ever seen it in any market.
Hey everyone, and welcome to another episode of the WTFinance podcast. On this episode, I have the pleasure of welcoming back Jason Shapiro. Jason is a trading legend with 30 plus years of trading experience, a hedge fund manager, and featured in the book Unknown Market Wizards. So, Jason, thanks so much for coming back on the podcast.
Good to see you again.
Yeah, looking forward to the conversation. Seems like there's lots of noise in the economy and then, in markets, the FOMC is coming up. This will be going up after sort of that meeting. But really interested in hearing sort of more about what you're currently seeing, I guess, sentiment-wise and in the markets overall.
I mean, I think the simple answer with the stock market is, it's a bull market. And a bull market obviously tends to go up. And that's kind of what's going on. There's going to be some noise here because, one of the narratives obviously has been that the market's going up in anticipation of the Fed cutting rates. And now tomorrow's the day. So that's the news. So it becomes sort of like a possible sell the news event, right? Buy the rumor, sell the news type of thing. And that's possible, but I don't think that it's the ultimate top. Personally, I think that there are a lot of people looking to sort of sell the news trade. From what I can tell, I kind of see it all over the place. I hear people talking about it all over the place, which probably means it doesn't work. It might work for a little bit, might work for the day tomorrow, might work for a week or so, but I really don't see any signs to this point that the market has topped yet.
Yeah, interesting. And is that sort of equities, or I guess because if you look at it, but basically we're in an everything bubble where almost all, maybe except for the dollar, but most other assets are sort of continuing to go up. So you've seen that across, in gold and other markets, or is that mainly just for equities at the moment?
No, I think everything. I don't know if are we in an everything bubble, or are we just in an everything bull market? And I don't know the answer, but I just think it's interesting to hear you say it's an everything bubble, because I don't know. It doesn't have to be a bubble. It could just be a bull market, right? We only know something's a bubble in retrospect, right? But I don't know. A lot of it clearly is dependent on the AI situation and what's going to go on there, and how much of that is real and how much of it is not real. But to this point, the markets are taking it as real, that's for sure, right? So I personally am a believer that you can have whatever opinion that you want, bullish, bearish, whatever, based on whatever you want, technicals, macro, whatever, but don't fight the market. And the market to this point is clearly saying that these things are bullish. The administration has made it pretty darn clear what their intentions are, right? Which is they want to pump everything, and they will do whatever it takes to do that. Not specifically the markets, but the economy and all that. Their belief is that they can pump the economy to a point where it is growing and creating enough revenue to offset the corresponding debt, thing. That's their belief. Whether it works or not, only time will tell. But it's clear that that's what they're going to do. They don't control the interest rates, although they're trying to, clearly, but they're going to push for interest rates to come down. They're going to push for money supply to go up. And all these things are net bullish, until it blows up, right? Until they print too much money, until interest rates are too low, until, and all that becomes very inflationary, and then we have a problem. But which is why gold is going up as well. But, until the markets say so, there's no reason to take that side of it. The markets are saying very clearly right now that that's good. So when will they say it's bad? Who knows? It could be as early as this week, or it could be a long time. Who knows? But as traders, we have to watch the market and watch the reaction to this stuff to see when the market is kind of giving its tell or giving its sign that enough is enough. But to this point, it clearly hasn't done that.
Yeah, and it seems like it's been a bit of a hated rally because if as you said, there's all these issues in the background that people are concerned about and think that it's going to have a massive impact on the market straight away. But as you said, things just keep floating up. Markets just keep going up.
Arguably the most hated stock market rally I've ever seen in my life. Almost without a doubt, the most hated all-time high in the stock market I've ever seen in my life. Which means it probably has more legs,
Yeah, it's interesting. Yeah, so when would you say was another hated rally that you can remember?
I can't remember any rally that's been hated like this at the highs. I've seen rallies off of lows, off a big move down, be hated. That's pretty typical. The move off the low in 2009 was hated for quite a while. The move off the low in 2022 was hated and probably still is, but has been kind of hated this whole way. So it's typical off of lows, but at all-time highs for a market to be this hated I don't think I've ever seen it in any market.
Yeah, it just seems like there's this disconnect, from economic data, from, we saw it with unemployment data, obviously massive revisions. There just seems to be that I don't know if something's changed, it's the fiscal dominance that's driving a shift in how economies work, or if it's this massive K economy that there's just a large amount of people who are keeping it buoyed, if it's the AI that we're talking about. But
what is the theory? I don't know. Because I don't have the data I don't know if anyone does, but what's the general theory for what AI is supposed to do, right? It's supposed to create ultimately a lot of growth with less need for employees, right? The economy is supposed to become a lot more efficient in that way. So call me crazy, but that seems to be what's going on. The employment numbers are coming down, but earnings numbers are going up. So the companies are making, if you take it as a whole, making more money with less employees. Is that not what AI is supposed to do? So maybe that's exactly what's happening. All these economists are looking at the past. What was the past? But the past didn't have this, this AI thing. We've clearly always had some form of technology improvement, but I don't think that you could say we've ever had this form of technology improvement at the speed that this stuff is supposed to go at, right? So, it's a battle between it's different this time and every time they say it's different this time, it's not different this time. There's the battle right there, right? Is it really different this time? And the market at this point is saying yes. And if it's not, and we're going to go back down and all that, the market will tell us. It just hasn't told us that yet. The market will give the signs. It just hasn't given those signs yet. So why fight it? Like, why is the market at all-time high valuations? In most measures of valuation? Well, either because it's ridiculously overvalued, or because it's saying something, which is that these valuations are justified because in the future, we're going to have a much more efficient economy. I don't know the answer. I can't see the future. But like I say, I don't fight the market. So until the market says otherwise, so far it's voting with the other way.
Yeah, it's what they believe. It's the narrative that the market's bought into, and yeah, as you said, these things can change very quickly, but they happen at the moment.
And they will. Things always change, and they will. But I don't really believe that the narrative is 100% all in on this AI. I understand people understand that AI is real. There's a lot more people that think it's real than did, say, a year ago. But I still think a lot of people are believing that it's a bubble and that it's overvalued, and they keep underperforming the market if that's what they think. So until they are forced to chase at some point, and I don't know what's going to get them to, I think we continue to go up.
And that is the top, isn't it? Once the most rigid haters who have sort of missed out on all the gains then jump in, that's when you sort of really, things.
That's right. And we're starting. I saw a couple little pieces, tiny little pieces of information this week that may be indicating that's starting. So maybe we're getting close.
Okay. And would you need sort of to see like an absolute massive flow to then be like, okay, this is looking concerning?
Yeah, I mean, for me, I need to see the positioning change. That there hasn't been any kind of mass long positioning in the stock indices whatsoever. I think that they want to be long, but everybody was hoping that September was going to be a down month because of the seasonals. Everybody heard that September was, a bad month seasonally. So I felt that the consensus was that, they wanted to wait for September to end and then buy, because then they think that there's going to be a rally into year end, Christmas rally, year end rally, that type of thing. But they never got the dip in September. So, and September's not over yet, but to this point, they haven't gotten that dip to buy in September. So the question becomes, if they do get a dip, do they actually buy? Don't know. We'll see. And B, if they never get a dip, then what do they do? Do they finally chase, or do they continue to sit out? And I don't know which one it is, but that's what's good about data, is we can try and come close to figuring out which one it ends up being.
Yeah. Do you have any thoughts on whether I know it's very hard to predict what's going to happen, but do you think there'll be a dip in September? As you said, it seems like so many people were so confident of this, and it maybe had a little bit, but then it sort of just continued to float upwards.
I think there's a possibility that we get some small sell the interest rate cut dip, but no, I don't really think there's going to be any kind of, personally, I don't see there being any kind of real big dip the rest of September. No.
Yeah, really interesting. And you said it's the same for AI stocks, which I guess have been some of the best performers. So they're still not at frothy levels from the sentiment that you're looking at.
I don't think so. I don't know that I'm a big buyer of Mag 7 stuff or anything, but there are certainly other places in the AI arena that I don't think are quite as frothy. I think you can find some pretty good stocks in places like power generation and all that. This whole miracle is clearly dependent on power generation. So you have the wind at your back if you're looking at those type of things, because those companies are going to have to grow. You just have to go through the universe of those and start to pick out which ones you like to buy based on, whatever process it is that you use, breakouts or whatever it is that you use. I think that's probably a ripe area to continue to be looking. And those stocks are doing well, but they continue to do well. So, this is nothing new, right? But they're still doing well. So they haven't stopped yet.
Yeah, and a lot of people are saying that there could be a shift from the Mag 7 to the Russell. Are you sort of, I don't know if you've seen anything similar to that's time for them to sort of outperform?
I think that, we got super bullish Russell based on our data and everything about a month ago. That's worked. It's outperformed. I think that trade is sort of being played out a little bit now, which you can see people are sort of shifting back into the NASDAQ type of thing. But I don't really know that it's going to matter very much which index you're in. I think you just, to this point, want to be in something. I don't really care if it's Russell, NASDAQ, Dow, S&P. You sort of want to be playing from the long side here until we see, like I say, until we see something change. It's a bull market right now. and it acts like a bull market right now. And until it stops acting like a bull market, which doesn't mean it goes up every single day. There's down days in bull markets. There's down weeks in bull markets. There's even down months in bull markets. But until it stops acting like a bull market, don't treat it as anything but a bull market.
Yeah, great. And is this mainly US, or do you see this sort of globally as in sort of I guess Europe and UK and
I mean,
Japan?
Europe, I think the Europe idea got played out much earlier in the year. Everybody was chasing Europe and thinking Europe was the place to be. And meanwhile, they should have been looking at things like Korea and Japan, right? I mean, look at the Korean market, which is pretty much AI relevant, chips and all that. Look at the Nikkei. The Nikkei is on new highs here, right? So, and Europe is not. So while everybody was trying to focus on Europe and all that, they probably should have been focusing on Asia.
Yeah, and then I guess you get the dollar trade as well, which seems, the yen seems to be appreciating quite a bit against the dollar, and it seems like it's probably going to have another. Dollar's going to continue to go down. It seems like it had a bit of a rally, but now it's going to go back the opposite way.
Maybe, it certainly is having a rough one today, and it's breaking to. It looks to me like it's basically breaking the new lows today, or it's testing that new low from July. After sort of sitting here for a couple months and not doing anything. So it was the last day of June, I think, when the dollar hit lows. So we've gone 2.5 months, and now we're right back there. So yeah, and this has all been the trade, right? It's all been one kind of trade, right? Bonds up, dollar down, stocks up, gold up. To me, that's the same trade, right? And that continues to, and that's what kind of should happen if rates are being lowered, and that is what's happening, as rates are being lowered. So until that breaks, right, I'm all for fading these things, but not until that relationship breaks. Let them cut rates and let those things not happen. And I don't mean that tomorrow, because everybody knows that they're cutting rates tomorrow. So there's no surprise there. There's no edge in knowing they're going to cut rates tomorrow. So I could certainly see some selling of that trade tomorrow on a one-day basis. But going forward, then after tomorrow, we're just going to start the whole thing all over again. Because now it's like, okay, well, what are they going to do at the next meeting? Or what are they going to do at the next two meetings? Well, let's see what the employment report comes out to be. Let's see what the CPI is. Let's see what the PPI. It's just going to go right back to where we came from, right? And then it's back to seeing what happens, how the numbers come out, how the markets react to that, how the positioning changes based on that, how the psychology changes. It's right back to that.
Yeah. Do you think markets are more, or I guess there's more noise in markets and what's happening, and that people are sort of listening too much to noise, or I guess how do you look at that?
That's always been the case. People like to look at the minutia of every number, like this last number that came out, I think it was the CPI or something like that, and people were arguing over 1/10 of a basis point difference, and I'm like, if this market is being driven by these AI companies that are growing at 100% a day or whatever the ridiculous number is, you look at the numbers that came out last week out of these companies, and like, you're worried about 1/10 of a basis point on the CPI number, or for that matter, a quarter point on interest rates here or there, when the companies that are driving this market are growing at hundreds of percent a year. It seems silly to me. The minutia of that seems very silly to me, right? Sometimes we're missing the forest for the trees, so to speak, right? If you believe in the AI story and you believe it's bullish, you're going to get out of your longs because the CPI comes out at, 3.415 instead of 3.411. Like, really? That seems kind of silly to me.
Yeah, great point. It is. So it seems like, from an asset allocation perspective, at least, bullish. You're quite bullish a lot of things. Is there anything else in particular that you're currently watching or things?
I mean, it's not really like I'm bullish. It's that the market is acting that way. You know what I mean? I'll change my mind in a day. Well, not a day, because tomorrow's going to be noisy, but I'll change my mind quickly as soon as the market tells me to, until it starts acting a different way. But no, to me, that's the story right now. Bonds up, stocks up, gold up. dollar down. That's the story. And until the market acts in a different way, that just continues to be the story. It's boring. I know that we could get a lot more views for your video today if I came on here and said, the market is about to crash. It's a once in a lifetime occurrence that you have to know about because we're about to lose 80% of our wealth, right? And you can put that as the headline. Market Wizard says guaranteed crash ahead, right? I'm sure that would get a lot more views, but it's just not reality. I still think it's reality. It's boring to say the same thing is happening, but that's what's happening. The same thing is happening right now. When the market changes how it reacts to these things, then we can have something to talk about as something different, right? Let the CPI come out weaker, let the PPI come out weaker, and let the market not react in this way. And then we can have something to talk about, right? But until then, it's just kind of business as usual. The trend is your friend type of thing.
Yeah, which makes sense. And I guess if we look back a few months, there was this large talk about, and I think we mentioned it before, other developed markets outside, so ex-US to outperform the US. There was talk about everyone, foreigners pulling their money out of the US, investing back in their home countries. Did you ever see any of those flow? I guess you've mentioned Japan and South Korea performed very well, but I never actually really saw massive outflows. It seems all to be qualitative. People talking about it.
Your inflows from foreign
Yeah.
into US bonds and stocks. So it just goes to show you that what a load of crap that kind of narrative is, right? People speculate on this narrative and they want it to make sense, but the data is what you want to pay attention to. It's not actually happening. So you can speculate, but on what you think, but why not look at the data and see what's actually happening, right?
Yeah. But all the data I saw didn't see anything at all. Talk is cheap. People are talking about it, but money kept flowing in.
They're bearish, so they want to talk about something bearish. There's a million things that you can talk about that's bearish, if that's what you want to do. Look, there's always something bearish that you can talk about, and there's always something bullish you can talk about. It's never all bullish or all bearish, right? So if you want to pick a side, you can always find a way to do that. I'm just looking at something that I wrote last week, which is where I quoted, I get this end of day thing saying, hey, here's what the market did today, that kind of thing in my inbox. And on this one day, there were 3 paragraphs. First paragraph started with U.S. economy has been worse for American workers than previously thought. Second paragraph was the U.S. Supreme Court added another stamp of approval, albeit a temporary one, to Trump's bid to concentrate power in the executive branch at the expense of Congress. Okay. Third one was Israel alerted the White House that it launched an unprecedented attack on Qatar, throwing into further doubt efforts to end the war. So negative, right? And then the fourth and last paragraph started with stocks hit all-time highs. That's the story. That's where we're at right now, right? A lot of negative narrative, a lot of positive market movement.
And you've mentioned it before, where you get worried once there's lots of positive news and you get the negative market sentiment or negative market movement.
That's right. And here we're getting the opposite. A lot of negative news and a lot of positive market movement, right? So it's hard for me to be bearish in that situation.
Yeah.
Can the market go down? Look, the market can go down. Jason Shapiro doesn't have a crystal ball, right? I just play risk reward, and I try to get risk reward by reading into these things and seeing if there's a tell in the marketplace. But as long as the market trades well, I don't see any reason to get bearish. Let the market tell us what to do. Let's not tell the market what it should do. That's how you have to react. That's how you have to act as a trader. It's not about my ability to predict what's going to happen. It's about my ability to accept what is happening and going with it.
I guess that's how people blow up, when they want the market to do something versus when they just,
It's exactly how people blow out. And look, you can blow out the other way too. I could be sitting here saying, oh, everything's bullshit, everything's bullshit. We could wake up tomorrow morning, there could be some freaking bomb or whatever blow up and the markets can crash, right? But that's what stops are for. You keep your stops in case you're wrong, That's all about risk management stuff, right? But the odds are, and you'll find that it's very rare, if ever, that a market closes on an all-time high and then the next day something bad happens that crashes it, right? The markets have a way of anticipating these things. Even if somebody were to blow up an atom bomb somewhere tomorrow, somebody somewhere knows that, and the markets would start to anticipate that. That's what markets do. So.
Yeah, great point. I know you mentioned you like to fade things, be a bit of a contrarian. I guess it's not always good for performance. But is there anything that you're looking at and that you sort of tempted to fade and be a contrarian on?
There's nothing really majorly set up right now for me. There's some things that are getting close, like silver. There's other things that could possibly get there, like the euro is working its way towards there, but hasn't gotten there yet. So I'm just sitting here basically waiting for those things to get there, and I won't be doing anything until they do get there and until the market starts to react in a different way, and then I can act. But until then, I'm just kind of sitting and waiting for those type of opportunities and just sitting on the stuff that I have now.
Yeah. And you don't have sort of, I guess, targets or price targets or any expectations. It's more just once the market acts as you think it will, when it is reversal, then you'll sort of get out. That's your strategy?
That's it. I have no idea when that will be or at what price that will be. I don't even really look at price, I look at market I look at positioning and I look at market reaction. That's really it.
Yeah, no, great. So Jason, thanks so much for your time today. We sort of touched on so much of what's happening in market sentiments, etc. But last question is, what is one message you want people to take away from our conversation?
Don't fight the tape. Don't try to be smarter than the market. That's, I think, the number one rule of this entire game. There are different ways that you can do things. I do them one way. I like to look at positioning. I think that's important. Positioning, sentiment. Okay, that's how I like to look at it. Other people like to look at technical stuff. Other people like to look at macro stuff. I don't really care what you look at. I don't really care if what you look at makes you bullish or bearish. Just don't fight the market, because that's just silly. You want to, when you're wrong, lose as little money as possible. And when you're right, make as much money as possible. Not fighting the tape will help you do that. You could be bearish on a macro level for the last 2 years, but you wouldn't have lost very much money if you weren't fighting the tape, because the market keeps making new highs. So you would keep saying, well, then I shouldn't be short because I'm fighting the tape. So you really wouldn't have lost much money. It's fine if you're super bearish for all these reasons. You hate Donald Trump and his policies and you think it's going to end the world or whatever. That's fine. Just don't fight the tape. That's the most important thing. Don't fight the tape. Let it agree with you first and then make your move.
It's a great message. And if people listen more often, they'd probably be doing a bit better off. But yeah, Jason, thanks so much. If anyone wanted to find out more about your work and what you do, where would the best place for that be?
Crowdedmarketreport.com. Or go on YouTube and look under that too. We have a lot of free videos and a lot of all kinds of goodies out there. So check it out.
Great, perfect. Yeah, I'll put it in the description and tag your video if anyone wants to, or your channel if anyone wants to find out more about what you do. But yeah, thanks again for your time.
Awesome. Thanks a lot, Anthony.
Hey everyone, thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment, good or bad feedback. I'm always open to that, but it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching and see you on the next show. And you also might like this video right here. All right, thanks again.